All right, welcome. Today we are diving deep into a systematic way to spot when the market is about to pull a complete 180. We're going to give you a really clear framework so you can start to anticipate that next big move before it even happens.
Look, we've all been there, right? The price is just screaming in one direction, you finally jump in, and bam, it completely reverses, and you're left holding the bag. So the million-dollar question is, how do you know, with real confidence, that a trend is actually changing for real?
Well, to get that confidence, you first have to understand the market's underlying pulse. It's a concept called order flow. And really, it's all about figuring out which way the big money, the institutional players, are pushing things.
At its heart, order flow is just the main current of institutional buying or selling. Think of it like a river. Your job as a trader isn't to swim against it. It's to figure out when that current is about to change direction so you can jump in and ride that new wave with all that momentum at your back.
Okay, so what's the very first clue that this powerful current is about to reverse? It all starts with a very specific event on the chart, a key level that fails and completely flips its purpose. Let's dig into how that works.
So, I want you to imagine a price level that's been acting like a solid floor. You know, it's consistently propping the price up. Well, a huge reversal signal happens when the market doesn't just tap that floor, it smashes right through it. All of a sudden, that old floor becomes the new ceiling, a new area of resistance.
Now, for those of you who are familiar with these kinds of concepts, this is going to sound very familiar. It's the exact same logic as when a bullish order block fails and turns into what we call a breaker block. An area that was supposed to hold the price up gets completely taken out, and its whole job just inverts.
But look, seeing one level flip, that's not enough to risk your hard-earned money on a trade. You need a system, a process for validation. And that is exactly where this 4-point checklist comes in. It's our step-by-step process for confirming that the order flow has really, truly changed.
And here it is. I want you to think of these like 4 dominoes that have to fall in the right order. Each one confirms the last, and together, they give us a super high probability signal that the market's direction is genuinely shifting. So let's break each one down.
First up, and you can't skip this one, the price has to reach a major target on a higher time frame chart, like the 1 hour or the 4 hour. Think of it like the market completing a big journey. Without this big picture context, any little reversal signal you see is way more likely to be a trap or a complete fakeout.
Second, we need to see that flip we were just talking about, a key area of support, something like a bullish fair value gap, which is basically an inefficiency in price that acts like a magnet. It has to be broken, and broken decisively. This is really the first true sign of weakness in that old trend.
Okay, third, we get even more specific. If you take the last price swing, you can split it in half. The top 50% is premium, it's expensive. The bottom 50% is discount, it's cheap. For a bearish reversal to be legit, sellers have to show they're aggressive enough to break a support level that's already in the discount area. It proves they're not waiting for a better price to sell. They are in control, right now.
And finally, number 4, the source material makes a really critical point here. A little, weak, hesitant break of a prior low, that's not good enough. What you need is a market structure shift with displacement. That means a powerful, energetic move with big candles that just screams institutional force. That displacement is the final, undeniable proof that the big players have stepped in and are now driving the bus.
Okay, that's enough theory. Let's see how this whole checklist actually plays out in a real-world trading scenario. We're going to walk through an example from the source material.
So, first things first, the big picture context. On the 1-hour chart, the overall trend was already down. Price then rallied up into a key area of resistance, in this case, a 1-hour fair value gap. And just like that, check. Our first and most important condition is met. The higher time frame draw on liquidity was hit.
Now that our big picture objective has been met, we can zoom in. We drop down to the 5-minute chart. This is where we're going to sit and watch for the rest of our confirmation signals to line up, giving us that precise entry point for the new bearish order flow.
And would you look at that? It plays out perfectly. All 4 of our criteria are met, right in sequence. The higher time frame level was hit, a bullish support area failed and flipped into resistance. We see that break happened down in the discount zone, and then for the finale, we get that powerful, energetic move down, confirming the entire shift. It's a textbook example.
So, you might be asking, why go through all this trouble?
Why is this four-step process so important? Well, according to the source, once these specific dominoes fall in line, the probability of the order flow actually reversing just based on price action is around 85%. Following this checklist gives you a massive statistical edge.
And that is exactly why this whole validation process matters so much. Once you have confirmed that the flow has shifted, you're not guessing anymore. You're not just hoping. You are strategically positioning yourself to trade with an incredibly powerful institutional tailwind.
Just look at the difference in the price action here. As you can see, the move up into that higher time frame level was slow, it was choppy, kind of like the snail. But once that reversal was validated, the move down was smooth, it was aggressive, and it was fast, like that paper airplane. That right there is the difference between fighting the current and riding the wave.
So now you've got a really solid four-step checklist for validating a reversal based on price. But this all leads to a really fascinating final thought. You've learned what to look for, but what if you could also anticipate when these high-probability reversals are most likely to happen? What happens when you align not just the price, but also time? We'll leave you with that to chew on.